Hey everybody, Eddie here. Just going to do a quick update for the week. We had a lot more downside. But the good thing is we actually hit some important support levels, and it seems to be bouncing off those levels on Thursday and Friday. So that's a good sign. But it's not really any sign of confirmation of a reversal yet. Just the start of something, of a potential reversal, right? So take a look at QQQ here. So you can see this is our downtrend, trend lines right here. We did bounce off the 50% Fibonacci level off the lows of COVID, right? So we did bounce off that, and on Friday we closed right at the 8-day moving average. So nothing is clear until we actually break above the 8 and 21 and come back to around this 50 area and need to hold this area, consolidate, and then break above, right? That's how the trend will change if this is the potential bottom. So the RSI is in the oversold and it's bouncing off that oversold level. The MACD looks like it wants to cross over, and potentially, if this is the bottom, we can actually start. If you're in it for the long term, you can actually start applying some capital and average into some ETFs or high quality blue chip names for the longer term, right? So dollar cost averaging works in situations like this, right? Where it's already down substantially, and there's probably another just on the Qs might be another 10-15% to go, but on the SPX, which we'll take a look later, is probably just another 10% down potentially. So you can always average into that type of trading from here. You go in with sometimes you can go in with 1/4 or 1/3. It's up to you. Normally what I do is if I go in with say 1/4 or 1/5 even, just to get a taste of where the market is going to go, and then what happens is I'll add another one fifth, like every 5% on the way down, right? That way you have it down to about 50% before you deploy the rest of your money, right? If the index falls 50%, that's a really good opportunity for longer term, right? So that's one way to look at it. So if you've been listening to what I've been telling people to go cash like way back in November, right? You should have a cash position that's ready to deploy at any time when there's a bottom is near, right? I'm not calling this the exact bottom because we can't time the exact bottoms, but this is pretty close, or pretty close to that bottom before the next rally up, right? Usually on midterm years, there's a rally at the end of the year. And I posted something on Facebook that something that was interesting is every decade, the year that ends with a two actually trends down at the beginning of the year till about August, right? Till about August before we start reversing, and then you get a big rally towards the end of the year, right? If that is the case, right, we can actually start scaling into some trades, and start positions on these high quality names or even just ETFs, and then plan for that big rally towards the end of the year, right? Because we can't time exact bottom, you don't want to miss the boat. That's one of the best ways to do it if you're doing it for the longer term. For me, I separate my account, so I do have a long-term account as well as a shorter term and a swing trading account and a day trading account. So I'll be day trading mostly, but in my longer term account, I am looking to deploy some cash because it's still not 100% cash right now because I got out when it broke the lows right here, right? And then now that it's finding some support at this 50% line on the Fibonacci level, right? So if it actually breaks back above the 8, maybe I'll start deploying some cash next week, right? If not, if you start coming back down, maybe I'll wait. If it does come back down, I'll wait till around this 0.618 level, and instead of deploying say 1/5, I'll be deploying maybe 1/3 down here, and then potentially, if it goes any lower than that, then the next level is actually the pre-COVID highs right over here. And that would probably be the absolute low if it is going that low this year. So let me measure that, right? So if we go down to pre-COVID lows, that's another 20% on the Qs. But if it just comes down to that 0.618, which is where I think it might go. That's about 15% from the close on Friday. So this 0.618% is actually the low right here in this consolidation from before. So this is potentially very high value support area to consider going back into the markets, right? And like I said, you want to scale into it. Never deploy all your cash at once, because we don't know when is exact bottom. It can actually go all the way back down to COVID bottom, right? You never know that. So that's why you always want to deploy in segments when you are looking at longer term. Now, if you're shorter term trader, right, the trend is still down. This 8-day moving average, it will have a big say, right? So if it's on the down, on the way down, it's going to get rejected at the 8. So on Monday, you'll get rejected on the 8, and then you'll get the next leg down, right? If this is still having momentum on the downside. So that's how you can tell. So if it's short-term play, if it breaks the low of that day off the 8 rejection, then you can go short, right? You can go short and trade the momentum on the downside till it reverses, right? That's what I've been doing. And but I mostly just day trade, so I look at different levels throughout the day, and then profit off just the swings during the daytime, right? So yeah, so that's the way you can start playing the markets right now. If you measure that, let's see how far down we are already. So at the low of Thursday, that was 30% down. So that's a bear market, right? Bear market territory. So when he broke down here, right, we enter bear market territory, which is right around that 20% is bear market. Anything more than 20% is a bear market. So we did enter that. We're now at 30% down, and we did have a jump on there into the 8. So if we do continue down further, right, down to about this 0.618, there'll be a total of about 37%, which is pretty significant, and that's a good area to start scaling in, like I said. Right, let's look at SPX. So SPX is performing relatively better than the NASDAQ. So if you take a look, the absolute bottom on Thursday was only 20%. So that's not even bear market territory. That's still in correction territory. And right now, after Thursday's close, we're actually just right at 16.5% down from the all-time high. So that's not too bad at all, right? So if this does continue down and then we break the lows of Thursday, we will enter into a bear market, right, on the S&P 500. And if that's the case, where is it going to go to, right? This 0.5%, 50% area is where I think, and that's right around where the COVID highs are. So if you do come down, this I think would be the final legs around that 3,500 area, which is about 26% correction. And if you look back in history on midterm years, the average correction is about 17%, 17% on midterm years, and it fluctuates a little bit plus or minus 5 points, right? So I mean, this is a good area that you can potentially look for entry on your favorite S&P 500 blue chip stocks, right? So you can see at this 0.382 area, we were close to that on Thursday, and we bounced off that. So right now we're landing right at the 8 as well. I want to next week to see it break above the 8 and head towards this 21 and break the 21. If we can break the 21, there's a pretty good chance that we're going to reverse all the back up to the 50, make like a sort of like a U-shape inverse head and shoulders pattern. And if that's the case, then usually that is more of a reversal or bottom formation onto the next cycle up, right? So that is one of the things I'm looking for next week. This looks to me like an island reversal, kind of like right here. So for there was no follow through, right? It did the island, it hit right into that resistance, and then it got rejected, right? But if we try again and hit over here, we could form like a right shoulder, and then this would be your neckline for the breakout into the next bull cycle, right? If you look onto the weekly chart, that's a nice reversal hammer around the weekly off that Fibonacci level. So, and this is a good support area for continuation, because in a uptrend, usually reverses down to the 0.382 on the fib, for continuation. So if you look at the weekly, that's only at 0.382. So we're still in a perfectly strong uptrend, as you can see, right? So if we actually just reverse here and continues higher, we're still in a perfectly good uptrend, right? So usually you want to stay in the trend till it gets broken, right? And if it does have a continuation down, look at where the 200-day moving average is landing on the weekly. We're at the 0.50 level on the fib, which is also the pre-COVID highs. So that would be a 50% retracement off the COVID lows, which is a significant level for bounce, right? So these are areas you're looking for bounces. So to play this, like I said, you want to scale into the trade. So if you go in, say 1/4 here, right, you can add another fourth and then another quarter and then another quarter till he hits right around that 0.5% level, right? That way your average price, instead of like all the way up here, will be somewhere in the middle, right? And if it bounces off here, you won't miss out, because if it bounces off here, you're already in that 1/4, and then you can just add on to it as it pulls back and then continues higher, right? And that's how you play these type of markets, is to scale into it at key levels, knowing that in previous corrections and previous bear markets, what's the average downside from the highs, right? It's about I think it's around 30 some percent. So we're right now at the lows of on Thursday was about 20%, right? So another 10% down from there would be like right around that 50%. So that would mark about 30% downside, right? So the over here, this is where you can start deploying a little bit of cash, but I wouldn't deploy the cash until you see it break above the 8-day moving average, right? Break above the 8, you can potentially trade it into the 21. If you got in and then you got rejected off the 21, you can hedge it and then just add more once you start coming back down towards that 0.5% level, right? So this is about money management, risk management, and keep some control when you deploy your money, because we don't know how far down it's going to go, and we don't know the exact bottom, but we still want to stay invested, have some exposure to the markets just in case that the market does rally from here, right? We are heading into weaker seasonality. So like May, June, July is usually fairly weak, and August tends to be some type of a reversal in August, and then we get like late September to have some weakness as well, and then by October is when the big rallies start happening. That's usually where the final bottom is around October, and then we have a really strong November, December. We never got any of that last year and early this year on seasonality, because of the high growth names went way too extended, and then it started the big correction right away, right? So it all started with the growth names, and then it got into the tech names, and then into the blue chip stocks as well. So that's usually how the cycle goes, right? So you want to really pay attention around those times to see what the price action is like for that month, right? Knowing that it is high seasonality. So if the price action matches with the seasonality, that's where you deploy more cash. If the price action does not match the seasonality, just because it is in seasonality does not mean you need to go into margin, does not mean you need to deploy the cash, even though the price action does not state there's a rally coming, right? So that's what you really need to learn, is how to read the price action, right? Because the price action determines the momentum, determines the trends, right? If the trend does not matches with the seasonality, obviously that seasonality is not going to work, right? So don't use seasonality as 100% sure thing, right? It only works like 8 out of 10 years. So last year was one of the years that it did not work, right? So hopefully this year it will. Anyway, we go look into the VIX. Right, so you can see the VIX, we hit peak volatility around this area, and it's starting to reverse now. So if it does break, you want to see the VIX go below 25. If the VIX goes back down below 25. It just stabilizes around that 22 area, 2022 area. So that's where we want to see the VIX to stay at, around that 2022, which is still fairly high for volatility. It's when it gets down to 15 that really stabilizes the markets in an uptrend, right? So there's still quite a ways down from 28. So keep a look on that to see how the volatility will look like. To me, if you look at the RSI, we have a higher low on the RSI. While it's making a higher high. So potentially this is the bottom, or at least a temporary bottom for reversal, right? So if we do get that reversal in May, end of May towards June, right? Sometimes that's a fairly good month, June. So we get a little rally before the next leg down, before and then a consolidation or some sort before going higher towards the end of the year, right? So just certain things to look for. Just pay attention to the levels. The levels are really important. If you know how to read the levels, then you can make money off those levels. That's why I trade with every single day. All right, let's take a look at Amazon. So you can see Amazon came down to a key support level, which is the pre-COVID highs, right? We did break through that a little bit, and then we kind of bounced right back down. So this is a sharp sell-off for Amazon, right? Why? This was a sharp rise on Amazon, same level. Once that level breaks, right? Once that level breaks, you either hedge or you get out. That's what I teach all my students every single day. Once the levels break, once you see that rejection, once it shows signs that it's not working, you need to get the hell out of the stock, right? Otherwise, you get caught in something like this, right? That's a huge drawdown, especially for a big stock like Amazon. Let's see, on that break, that was a 30% drop from the break of this consolidation range, right? That's a huge drop, right? And this is a good area to start scaling in for the longer term, right? So you can see that RSI went below the oversold territories, coming back out of it. We're right at the 8-day moving average. Even if it breaks the 8 and it goes 21, that's a pretty good move. That's a good size move that you can profit off of it, right? So that is about 10%, 11% move. So if we do break above this 8-day moving average, you can probably do a short-term trade from here up to around that 21 at 2,500. So keep an eye out for Amazon. You want to set an alert at the low of Thursday, right? So set an alert at that level. If it breaks that low, we're going to test this 2,000, which is a really, really important area. If that area fails, it's going to go back to the pre-COVID, the COVID lows, right? That's the next level down. And if it does hit down that level, I'm going to load up on this stock because that's a steep discount. But I am looking to buy this as well for longer term. So this is one of my top picks if this stabilizes right around here. So Apple's stronger of the bunch. It's still staying above like the lows of October, right? And it is at the bottom range of this downtrend. So most likely it's going to bounce off this area right here. You can see the volume start getting pretty high around this level. We are bouncing off the lows of the RSI as well. And potentially, if we do go up, you're looking at the 200-day moving average as a heavy resistance area. So around this 155 to 160 is a really important area. Probably where you're going to get the rejection if it does get rejected, right? If we do bounce up here, just consolidates, it might actually end up breaking out and go into new all-time highs, right? So just pay close attention to that. I would keep an eye out on the this low right here. If it breaks this low, you would probably want to hedge it or get out of it, because the next level of support is like down here at that 116 to 110 level, right? So if that level breaks down, it's quite a bit further down. So you want to hedge it on the way down if you want to hold it for longer term, or you just get out of the stock completely. Microsoft, so Microsoft, same thing. It was in this range and it broke down, right? It broke down where it found some kind of support around this level right here, but it potentially can drop all the way down to about this 210 area, right? This is the major support area. So if there is another leg down, this is the area where you want to start buying. It's around this 200 to 210 area. So I am waiting around to see if you can actually go back into the box. If it does not go back into the box, most likely there'll be a rejection, and this will be your next leg down all the way down here. So if it does come down here, I will be buying. So Google, same thing. It broke this consolidation range. It did come down to exactly, it didn't even trigger my alert, exactly to around this level right here, which I say was the next level of support. So it did found support over here. It went back above the 8. Looking forward to break the 21 and then go back into this upper range right here between this area to consolidate, right? If you can come back into this area to consolidate, most likely once this market this market correction finishes, Google will be one of the stocks that will make new all-time highs, because Google's still a very high growth stock that still makes a lot of money as well. So that's what you want: high growth rate, as well as very profitable. So there's not a lot of those names out there, and Google is one of the best names that you can buy. Right, Tesla. So Tesla is a very volatile stock. Obviously, if you've been playing Tesla for past year, you should know that, right? So it is near the lower range of this downtrend. It is hitting some of these key levels over here, this consolidation range. So 700 is a very important level to hold. If 700 does not hold, it can come down all the way down to about 500 to 550, right? So you want to see 700 to hold. If not, you want to hedge it, or at least short it all the way down to around that 550, 600 area maybe. I would probably, if I'm shorting, I'll probably take it off around that 6, just because it's a psychological area. And then if 600 breaks down, then I will aim for maybe 550, 500, right? But what I'm looking for is to see it bounce back up towards the upper part of the trend, most likely get rejected here the first time. And then you want to see it consolidate, let the moving averages stack back together in your favor, and then a breakout from there, right? And there's still a lot of supply issues for electrical vehicles. So I don't know what type of impact that will have on Tesla. I know that I invest in NIO, and that they having huge issues with their supply chain. So and that's delaying a lot of their delivery rates in sales, because the COVID shutdown in China right now. So, all right. Nvidia, so Nvidia has a huge correction from the highs, which was expected because this was a massive run up. Whenever you get a massive run up like this, whenever the momentum dies, it comes all the way back down. So I told people this about growth names all the time, and people don't listen. So it doesn't matter how good the name is. It can fall just as much as any other name. If it goes up that fast, it can come down just as fast, right? So we're hitting that 150 level, which is a key support level right here. So this is the pre-COVID high level, right? So this is a good area to actually start going back into NVIDIA for the longer term. You wanted to. NVIDIA still is a very high growth name. And there's still a huge demand for it. So if you ever try to buy a computer, you'll know that trying to find an NVIDIA card on its own is very hard, almost impossible to get them off the black market or something, because you had to pay extra money for it. I think their card costs almost twice as much to get them than to buy them for retail. So sometimes like it's cheaper to just buy a pre-built computer and take the card. Right. So I bought a new computer with a 3080 NVIDIA card on there, just because I needed the card. Anyways, the stock. So it's a huge downtrend, and you can see this has been following stair steps down all the way down. So it's finding some kind of support right here. You can see right here, as it's making new lows. RSI is not making new lows, it's actually making a higher low. So that's a positive divergence and a potential reversal. They do have earnings coming up, so it could be good earnings, and this stock can fly for a little bit. Your target from here about about that 200 area, right around this consolidation area. If you actually can break this area, it can come up to this 230, which is 50-day moving average. From here to 250, that's a really good move. And it's an investable move. So actually next week, I might get some shares next week. There is some signs of momentum next week into earnings. I won't bet big on this, but I would probably get some shares for longer term anyways. And so I'll get some shares and then maybe I'll play a lotto on earnings. All right. So that's pretty much it for this week. We can actually look at some sectors to see what the sectors are doing. As you can see, growth names are outperforming value names at the moment. So that means risk is coming back on, right? So growth names on Friday went up 3.27%, while the value names went up 1.5, right? So that's a pretty big difference. As you can look, risk on names like ARC, right, is making some huge jumps on these type of names. For ARC, it's looking interesting because we're at COVID lows, right? That's a pretty, we gave back all the gains in the last couple of years, all of it. So potentially this is the investable area to get into, right? So I am looking at this closely to see if it will create a base here. You can see the volume start rising significantly. So you want to see rise in volume as the market finds a bottom, right? So this potentially is the bottom. I want to see it consolidate. I want to see the moving averages get stacked together after consolidation and then a breakout after, right? Target, well, short-term targets about 50-day moving average, as you can see right here. Like last time hits the 50, drops back down. Long-term targets 200. 200 is a little bit too far away from this, so there's no, this will not go back to the highs anytime soon at all. But potentially could run up back into this $70 area and potentially 90. But your best bet is to aim just for around like where the 50 is if you're looking for a trade. All right. Bots is looking very interesting as well. So bots are into the COVID high level right now. I'm looking for, you see the volume start picking up, right? I'm looking for it to get flattened out just like the other ones, and then hopefully find a V-shaped recovery back up to around that $30 area. But you can start scaling into these ETFs, right? Like I said, you want to scale into them because it's hard to find the exact bottom, but since they're ETFs and they're in growth sectors for like the next decade or so, you're in pretty good hands at these price points. So you can actually go in, scale into it, and just buy like every single time it drops a couple bucks, just add a little bit more till he finds the exact bottom, and then on his way back up, you'll make all the money, right? So Drive is like also I'm looking at this as well. So this is the EV and autonomous driving type of ETF. It is in a downtrend, so there's really nothing showing signs of reversal on this just yet. I do want to see it drop a little bit further, like down to around the $16 area. I don't know if it will drop down to here because it's showing pretty good strength compared to the other high growth ETFs. It's actually fairly good strength. It did break this consolidation range, so it is in a bear territory. But I am waiting for it to drop down to probably around this 18 level before it start looking interesting for me. So I'll be looking at that. This is a Chinese ETF, and they're lowering their interest rates, so it could be good for the economy over there, and potentially this could be the bottom. So I'm looking at the ETFs. It is high risk because you're getting that political risk from any kind of thing with the US. They could put some pressure on Chinese stocks, so invest in China with caution, right? Okay, hack is at pre-COVID highs, right? And it seems to be holding around this level right here. It went to oversold to come back above. So if it does have a bounce, most likely it come up to about 52. So you get a few dollars off that trade if you want to trade it. But this is one of the names that I am looking to get back into. I did get out of this ETF already, but I am looking to get back into it. And these price points are very attractive to me because this is a really good sector. And as you know, there's a lot of cyber attacks now, and soon every single company will require some cybersecurity, right? So it's a high growth industry to get into, um, and it's something to look at. So IHI is another one that I'm looking at. This is medical devices. I'm sure once this COVID thing's over and people start doing surgeries again and everything, and this ETF will come back to the highs because this is still a very high growth area. A lot of hospitals still need to be upgraded to the new equipment for futuristic surgeries, right? They have these robotics surgeries that can do very high precision on specialty surgeries that shows very little, that requires very little cut to get them done. So it is the way that surgeries are going for the future, and this is a really good sector to get into. SMH. SMH is your semiconductors. It found some support at this bottom, right? This is the range before the big break from here. So this is the big support level before the big drop. So you want to pay close attention to this level. If this level drops, it's a big drop. Right? If that drops, you're looking at around this area and this area. So around that 155 to 165. So that's a fairly significant drop if it breaks below here, right? But if it doesn't break below here, this is the bottom, and then it'll reverse. That's a 30% potential drop from here. So semiconductors is still a really good space to get into because everything requires semiconductors. But I think at some point in time, there will be, once the supply chain fixes itself, I think there'll be some oversupply, which will bring this down. But for now, it's holding here, and it's still in a downtrend because we're below all the moving averages. So you want to see it to consolidate and then a break higher. Most likely, it's just going to go back up to around this level right here, around this 270 to 280 level. So that's your target. But right now, I probably wouldn't play this just because I'm not that bullish on this sector right now. I am waiting for some sort of sign of a reversal, and I don't see that just yet. All right, so this is pretty much it for this week. I'll see you guys in Discord. I will be offering my day trading course sometime in the next couple months again. So keep an eye out for that because a lot of people have been asking to see if they can take the course, and you can take the course anytime. Actually, our previous course is recorded, so you can actually go on our website, licapitaltrading.com. That's licapitaltrading.com. You can go on there, sign up for the course so you can review the recorded live course, and as well you can join our Discord to see our trades every single day. And with the course, sometimes once I hit a certain number, I go live, and you can go trading live with me during the day. So that's also part of the course, and you can learn much better watching me trade live because you'll understand the course a little bit more. And day trading is a great skill because when markets are like this, where there's no trades and you have to go cash, day trading is how you cash flow, right? So I actually made more money day trading this year than I did swing trading last year. So just keep an eye out for when I have the live course, and you can sign up and see. All right, talk to you guys later.